Ladies and gentlemen, good day and welcome to the Manba Finance Limited Q1 FY26 earnings conference call hosted by Ventura Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. Before we begin, I would like to point out that this conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company, and it may involve risks and uncertainties that are difficult to predict. I would now like to hand over the floor to Tushar from Ventura Securities. Thank you, and over to you, Tushar.
Thank you. Good day, ladies and gentlemen. On behalf of Ventura Securities, I welcome you all to the Manba Finance Limited Q1 FY26 earnings conference call. The company is today represented by Mr. Manish Shah, Managing Director, and Mr. Jay Mota, Executive Director and CFO of the company. I would now like to hand over the call to Mr. Manish Shah for his opening remarks. Thank you, and over to you, sir.
Thank you, Tushar. Good afternoon, all, everyone, and thank you for joining Manba Finance Limited earnings call today to discuss the performance for the first quarter of financial year 2026. I would also like to thank Ventura Securities for hosting this earnings call. In the interest of some of the people who are new to the company, let me first start by giving a brief overview of the company and operational highlights, followed by our CFO will brief you on the financial performance for the first quarter. Manba Finance is an NBFC, a range of financial solutions including loans to new two-wheeler, three-wheeler, used cars, small business loan, top-up loan and used two-wheeler loans. We are currently operating in 76 locations across 6 states, precisely Maharashtra, Gujarat, Rajasthan, MP, Chhattisgarh and UP. Our distribution network includes over 1250 plus dealers. We have secured funding from 3 public sector banks, 9 private sector banks and 25 NBFCs. We also have a co-lending arrangement with Muthoot Capital Services. We have a total team size of 1522 employees, out of which more than 700 plus employees are part of our sales team. Our internal collection team ensures lowest NPA in the industry. The company commands one of the fastest turnaround times for loan sanctioning in the industry, with over 60% of loans sanctioned in 1 minute and 92% of the loans sanctioned on the same day. Now let me discuss some of the key operational highlights for the first quarter of financial year 2026. Our asset under management AUM stood at 1,415 crore, reflecting a robust year-on-year growth of 43%. We also achieved a record high disbursement of 165 crore rupees in quarter 1 FY26, up from 130 crore in the quarter 1 FY25, which is almost a 27% growth. This strong growth was driven by the continued expansion of our dealer network. We added 1258 dealers at the quarter end, which has grown by 77% on year. We have expanded to 76 locations. In other update, we forged several new tie-ups during the quarter in both used two-wheeler and used four-wheeler segment, which is a new for the company. Additionally, we entered into business correspondence partnership with Prosperity, FinCooper and Omraj to further enhance our market reach. The launch of new collection app has also significantly improved our collection efficiency. We are also proud to share that Manba Finance has now been qualified as a mid-layer RBI NBFC. Now I request our CFO and Executive Director, Mr. Jai Mohta, to brief you on financial performance.
Thank you, Manish sir, and good afternoon, everyone. Let me provide a brief overview of the financial performance for the first quarter of the financial year 2026. For the first quarter under review, our net interest income stood at rupees 31 crore, reflecting a 38% year-on-year growth with the net interest margin of 12.43%. Profit after tax for the quarter was around rupees 10 crore, which grew by 89% year-on-year. The cost of borrowing currently stands at 11.05%. Our GNPA stood at 3.47% and NNPA was 2.64% as on 30th June 2025. While our capital adequacy ratio stands at 28.21%. With this, we can now open the floor for the question and answer session. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask a question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. The first question comes from Nimin Doshi from Geojit PMS. Please go ahead.
Thanks for this opportunity. I have a couple of questions. Firstly, with respect to interest income, just going through your financials, it seems that there has been sequential decline in interest income from 65.5 crores to 63 crores. So what explains this while our AUM has grown? Secondly, what explains the steep increase in borrowing costs and other income for that matter for Q1?
Yeah. So, hello. Hi, am I audible?
Yes, sir. Yes, sir.
So the decrease in the interest income is due to the change in the repo rate and everything. So we have to also reduce the rate of interest to the customer. So that's why there was a slight decrease in the this we can say in the interest income, total income. Okay.
Secondly, on the same line, there is from the January to tighten our credit, we have restricted our loan to value, and for that we are offering a low rate of interest. So eventually it is going to be helpful for better NPA. So my gross income has been reduced. That is also one of the reasons.
Okay. So, sir, I believe most of our loans would be fixed in nature. So this would be for the incremental loans that we have disbursed, right?
Yeah. So this has started from January, and as we know that this is a very short-term loans. Average loan tenure is only 24 months only. So immediately it starts reflecting, quarter on quarter.
Okay. And what explains the increase in finance cost for that matter?
So increase in finance cost was due to we are keeping good liquidity with us right now, somewhere around 150 to 200 crore with us to strengthen our balance sheet. And second, normally we used to do 2 to 3 PTC transaction, which gives us the lower rate of interest. But this month we have not done this quarter. So we are exploring the PTC transaction in coming quarter 2 or maybe quarter 3.
Okay. So what is our rate of interest for the new loans from 1st Jan?
So our new loan interest to the customers, where we are restricting LTV up to 75%, that stands for 18 to 19 IRR, and between 75 to 85% we are giving at 20 to 21 IRR. And the mix of the business in these two LTV category is around, in this up to 75%, we are doing almost 60% of our loan.
Okay. So up to 60%. So largely our yield would be in the range of 20 to 21%, right?
5 to 20, yeah.
Okay. Going ahead, sir, how should we see this panning out given the interest rate cut has happened and our loan book is more or less fixed in nature? It's a high yielding book for us. So how should the NIMs progress even on the credit cost front? What do you expect, and do you see any asset quality issues, which is the reason why you have started offering lower LTV for that matter? Is that the case?
No. So our assets so far behaving very nicely, but the moment we all know from September, MFI and personal loan is affected. So these are some of the customers who are also keep taking the personal loan, and they keep serving both the EMIs here and there. So that's the reason we have reduced our LTV to that. Once the customer is having a 20 to 25% of equity, there is a very rare chance that he will, not serve this loan properly.
Okay. Nothing to read into PCR. Will there be increase in provision coverage going ahead? Because we are, at 20 to 25%, whereas peers would be approximately 40 to 50% with respect to provision coverage. Any thoughts on that?
Yeah. So as far as my competitors are concerned, their credit loss is around 2.5 to 3%, and some is having a 4 and 5 also. Whereas my credit loss across in last many years is not even more than 1% also. It is always less than 1%. So my eventual credit loss is very less. Still, every year on year we are increasing the PCR to strengthen our balance sheet. Because it has started the journey with 10%, then 13, then in 23-24 we made it 16.5, 24-25 we made it 20, and now last year we made it 24. Then this year we are targeting to make it 26 or 27.
Okay, got it. Lastly, sir, your strategy around the next few years, how would you be planning towards the growth with respect to your asset mix? Will it be more focused towards two-wheelers, three-wheelers, or personal loans, which is high-yielding segment for you? Will that contribute, given the fact that you are facing some of the asset quality issues over there? So what would be the mix and the strategy around your AUM growth and mix for the couple of years going ahead?
Yeah. So today my, two-wheeler contribution to the net total AUM is around 82%. My top up is around 7%, and in the additional 10%, all other products are there, such as three-wheeler, used car, and small business loan. So over every year, our concentration on two-wheeler, of course, will remain major, but in a 3 years' time, we would like to bring it to 70% to our total book size, 65 to 70%. And balancedly it will grow with the EV financing, three-wheeler, used car. Personal loan and small business loan will always be, very, very cautiously we will grow, because that is the only unsecured loan company is into, which is today not even 4% of my total AUM.
Okay. Sir, last question from my side.
Further clarify that in the next 2 to 3 years also, the unsecured portfolio will remain under 10% only.
Okay. Got it. Lastly, is it fair to assume that your AUM growth will be on a lower base, it would be 35 to 40%, whereas your PAT growth, given the fact that you will be investing more towards the distribution and technology side, will that be on a lower end, or that would exceed 35 to 40% given the operating leverage will come into play?
Yeah. So, as a philosophy, we want to grow by 30-35% only, not even 35 to 40, because this is a retail products. So, 30 to 35% if you grow, then only you will be able to focus and keep a proper bandwidth on the collection side.
Okay. So 30 to 35% both on AUM as well as on the PAT side, right?
Yeah.
And one last thing, sir. What explains the jump in other income? It's 2 crores for the quarter.
So that 2 crore is like maturity amount we have received from the LIC towards the key main policy we have taken in earlier year. So it was 2 crore we have received upon the maturity in the company only.
Okay. Thank you so much, and all the very best.
Yeah, thanks.
Thank you. The next question comes from Parth Jainwala from DAM Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. So I have two questions. The first question has been partly answered. So, sir, in terms of our segments where we operate in, are you seeing any stress particular which could be a bigger going ahead, considering we are into small business and vehicles, and other players have also alluded to some stress in this segment? That was the first question. And sir, secondly, while you have given an AUM growth guidance of 30-35%, how do we think of a long-term strategy in terms of profitability for next 2 to 3 years? So see, in one of our calls, we had mentioned that our PAT would be touching 100 crores by FY27. So are we on track for this? Or how to think about this, sir? Those are the two questions.
Yeah. So, as far as stress, your first question is concerned, as I already told you that we have been, closely monitoring, watching the entire, bouncing of EMIs and credit loss and all, and that's the reason we have reduced our LTV to almost 8 to 10%, which we were doing till 31st of December 2024. So, in two-wheeler, controlling the LTV, that is the biggest weapon to control your credit loss. So that's, we are clearly, able to manage. And we have, some of the states which we have just started just in last 2.5 years, which is UP, MP and Chhattisgarh. There is a huge scope of expansion, with the, restriction on the credit parameters. So this, as far as stress asset is concerned, or on a NPA side it is concerned, it will be well taken, and this story which we have, the way we have performed in the past, that will continue for the future. As far as your second question is concerned, that 27 we will reach around 100 crore. Yes, because see the way we are growing from 23 to 24, 24 to 25, and now every year 30-35% we are talking about the growth, but the eventual impact in the PAT will be more because we are leveraging our infrastructure cost, we are leveraging our senior employees who have been joining last 1.5 to 2 years, and then the moment they will reach at one level of AUM, that cost will be leveraged. So reaching profitability of 100 by 85 to 100 by 27 should not be an issue.
Got it, sir. Thank you so much.
Yeah.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. The next question comes from Sudarshan Nachimuthu from Prosperity Wealth Management. Please go ahead.
Hello, sir. Thank you for the opportunity. My question is on the asset quality front. I believe during our last call we mentioned we might be providing stage 1 and 2 assets going from now. So if possible, from next presentation, those details included would be helpful. And for this, can you just comment on what is the current numbers of stage 1 and stage 2?
Yes. Hello.
So, first of all, though, that day also, if you just see, we have told that every half yearly, that means on September result, with the presentation only we are going to give you stage 1 and stage 2 numbers. But for your knowledge, what is the, numbers for the June, that can be, we can really share with our IR agency, and we'll definitely share this number with the Valorum.
Right. Thank you. That would be helpful. And on the yield front, you did mention from January you have reduced the yields and your customer quality has gone up. So, taking the full year into account, what would be the closing NIMs for the year?
So, my NIM will remain what is been shown around 12.43. It will remain almost similar to that only. Maybe, because the way we have reduced for the on a LTV ground, at the same time, we have started the small business loan. That is also a little bit growing, and that we are lending almost at 22 to 24 IRR. So that will, as a mix of everything, this will support.
Okay. Thank you. And regarding branch vintage, you did mention your operating leverage will play out. So if you can just, sort of give us a number wherein what is your AUM of branch which is 2 years older and AUMs of branch which is 6 months older. Is there any metric you guys are tracking? That would be helpful.
Yeah. So, out of 1400 crore, almost, the branches which are in Maharashtra, Gujarat and Rajasthan, they all are almost 4 year plus there. Our presence is there more than 4 years. So this is all a matured branches, and the AUM totaling to Maharashtra, Gujarat and Rajasthan, out of this 1400 is around 1150 crore rupees.
Okay. That's it. And regarding customer breakup in terms of OEs, so is there any possibility of giving us how much is from your TVS and how much is from Hero?
Yeah. So, we are actively, lending in the 4 brands, Honda, Hero, TVS and Suzuki. Our Hero is around 35%, Honda is around 28%, TVS is around 18%, and the balance is around Suzuki, which is 10 to 12%.
Okay. And is it safe to assume a chunk of these loans would be scooter loans?
Pardon?
So,
scooter and motorcycle you are talking?
Yeah. So is it majority of scooters or is it scooters and motorcycles?
So 60 to 65% is scooter and balance is motorcycle.
Right. And can you please confirm if your co-lending arrangement with Muthoot is still going on?
Yeah. So, this is now, from the, as we have a very better, capital adequacy ratio and leverage we have available. So now from the 1st May, we have stopped disbursing new disbursement from Muthoot Capital arrangement. Only whatever we have done in past, that we are serving.
Right. And so the AUM which you mentioned, how much of it is on your book and what is the Muthoot or other co-lending share?
Yeah.
So out of 1415 crore, 1280 crore is on book, and with Muthoot is somewhere around 130 crore, and balance 30 crore is from DA transaction.
Right. Okay. And on the cost of borrowing front, so sequentially we have seen an increase, and you did mention this pertains to your PTC transaction not happening in this quarter. But however, we see that there is an NCD issuance in Q1 which was at 11.3% coupons. So can you just confirm what is the bank borrowing cost versus your NCD cost?
So bank borrowing is right now below 11%.
Okay. And is there any particular reason we opted for NCD rather than getting into banks? Because NCD is fixed for 2 years, and given the 4-year cuts and possibility of it coming in another this MPC?
No. So NCD, it is, there are 2-3 things. One is bullet payment. Secondly, it is, through NCD, because now from last 3 of our issuance we are giving retail NCD, that is 10,000. So we want more and more people should remain in touch with Manba. And now almost there are 8,000 NCD holders are there who are watching closely Manba Finance, along with my almost 20,000 shareholders. So this is the whole idea of issuing more NCD. And so later, maybe 6 months, 1 year down, we would like to come with the NCD debt IPO also. So that in a way, what we have observed that reducing rate from bank, it is always depend upon the repo and all. But as far as NCD is concerned, it is a mix of your performance as well as the repo reduction. So that's the reason we are more focusing nowadays on the NCD.
Okay. And the recent 50 bits cut, is it fully passed on to you by the banks?
Can you speak a little loudly? Yeah, please.
My question is, the reason 50 bits cut, does the bank have passed it to you?
No, it will be passed now onwards, because they have just repo rate has been reduced on the 5th of June. So they will be passing on whatever reduction is there. It will be in coming quarters.
Right. Okay. So thank you very much. That's it from my end. I will join back with you.
Yeah.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. The next question comes from Jay Chauhan from Chanitra Asset Management. Please go ahead.
Good afternoon, and thank you for the opportunity. I'm audible?
Yeah.
So, sir, most of my questions have been answered, but just one question I have, which is currently your borrowings include banks, NBFCs, NCDs. Given your strong capital position growth plans, are you exploring any new funding avenues like ECBs or bonds or any alternative funding sources?
So, see, as a policy, we keep exploring new funds and, new banks, new avenues. So, if you see 3 years before, we were doing only CC term loans, then we started PTC, then we started TA, direct assignment, then we started co-lending, now a lot of aggressive in the NCD. At the same time, we are already discussing 1 or 2 aggregator who are very, resourceful in ECB transactions. But it is difficult to, say when and where it is going to be clicked. But yes, we are exploring.
Right, sir. Understood. That's it from my side, sir. All my questions have been answered. Thank you.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. The next question comes from Mithun Shah, an individual investor. Please go ahead.
Yeah, good afternoon, sir, and thank you for my question. First question is on industry growth, as we are building 35% type of a growth in our business. What is the expectation for two-wheeler industry growth over next 2 years we are building in our assessment?
Yeah. So two-wheeler this year it seems around 10 to 12%. And as discussing with a lot of OEMs, their prediction for the next year also in the same range. Versus how we will be able to achieve 30 to 35% growth, because there are a lot of newly operated states in our book, which is UP, MP and Chhattisgarh, and lot of geographies it is untouched so far. So for us, reaching out to 35% growth AUM should not be a problem. At the same time, we have introduced now a couple of products also. Now the company is not only dependent on the two-wheeler, now we are also in the EV financing, three-wheeler, used car, small business loan, and top up. So it's a bouquet of products now, and reaching 30 to 35% growth should not be a challenge for company.
So this 10-12% growth you are assuming for vehicle numbers or in terms of revenue or prices of the vehicle?
No, so this is what I have told you is about the vehicle numbers, but effectively it will give us a growth of almost 14 to 15% because every year there is a price increment of 4 to 5% in the vehicle cost.
Okay. And in case if the situation may be slightly challenging because of all this global turmoil and all US tariff related impact on Indian economy, in case industry grows by 5-6%, two-wheeler industry, still will be able to do 25-30% growth because of the expansion into new geographies?
Yes. This is how we are measuring quarter on quarter. The moment we have understood that that in this quarter also we see the Honda and Hero both have degrown. Okay, so we have immediately taken a step and added 8 more locations in the UP, and that will be effective from 15th of August operationally, and I think that will cover up the gaps which has been happening in the industry.
The second question on replacement side or like a resale vehicle financing, as we have seen across automobile segments, passenger vehicle, two-wheelers and even three-wheelers in last 4-5 years, there has been a very strong growth on the OEM side. So generally, we observed that in subsequent 2-3 years, there is a higher growth for the replacement as around 4 to 5 years is a replacement cycle for two-wheelers or even in case of passenger vehicle 6-7 years. So what is our target for this part of the financing and where do you see in overall pie in 2-3 years down the line? And what is the strategy we are doing to increase the dependence rather than only on the two-wheeler OEMs?
Yeah. So, we are talking about the other products, right? Other than two-wheeler.
Yeah. Other than OEM sales, as you initially highlighted, that second-hand passenger vehicle financing and all.
So used two-wheeler also we have been, very aggressive. We are very active in this. And same with the used car also, because the moment we started and we are getting a very good response in the NCD at 11%. So now we are in a position to lend at 17 IR, 16 to 17 IRR with the used car, which was previously not possible for the company, for the cost of borrowing. So that is also increasing. Used two-wheeler, there is a lot of professional and organized players have started opening up the showrooms and branches in the used two-wheeler, and it is becoming little mature product. So now on that side also company is focusing. As I mentioned in my opening remarks also that we have started business correspondence, partners. Already 3 partners have started disbursement in this quarter, and in the coming quarter 4 more are joining. So that also we have taken as a backup plan to reach our AUM targets.
Okay. And last question on your strategic profitability target of about 85 to 100 crore in next 2 years or maybe in 3 years. So can you give more detail in terms of this 30-35% growth in terms of how much would be the industry underlying growth as you highlighted about 10-12% and how much would be from the network expansion, how much can be from the market share gain or any other non-two-wheeler segment growth related indication to reach this 85-100 crore target, including 35% top line growth and bottom line growth even higher than that. If you can give more details on this.
Yes. So I will give you a couple of, reply to this. One is, there is a natural growth where we are already already mature. For example, we are present in our 4 to 5 years. So almost all the geography already explored. So there our growth will restricted to 10 to 12% only. It will be always in the parallel with how industry is growing. But at the same time, there are 3 states where, our reach out is not even, we have not reached to even 20% of the market. So that every year we'll keep on adding more locations. As far as market share is concerned, in the area where we perform more than 4 years, historically our market shares range in between 14 to 18%. And all these 3 new areas where our market share is only 3 to 4%. So there is a huge potential availability is there. So all this data which clearly shows that till 28, 29, only with this, if we don't expand any more state, still we will be able to reach out to 30 to 35%. As far as vehicle portfolio is concerned, small business loan, we started the journey before 15 months, only with Mumbai as a branch. Then it was a good performance. We started at Nasik, Pune, now Ahmedabad, and now in the October we are starting from Jaipur also. So that product is also gradually growing. Of course, the scenario for the unsecured is little tight, so we are going very, very conservative and very precautionary approach we have applied. So still there is a huge potential in that product also. So reaching out 30 to 35% is not a challenge. And now, as I told you, because of this is a big element to reach out 85 to 100 crore profitability. At the same time, it will leverage my present infrastructure. It will leverage my all senior professionals who have been joined. For example, UP, where we have taken a very senior person of the industry with 20 years of experience. Now, with a zero, disbursement, their cost was huge. Now today, almost every month on month, UP is disbursing 6 to 7 crore rupees. So gradually, in a year, 2 years, his cost will be leveraged. So putting all these parameters and what we are assuming that to pass on the customer is a 50% of what we are getting, what we are going to get benefit from a reduction in our cost. Fourthly, we are also in a process of rating agencies where my appraisal is there in the month of August, and we are very positive on getting A-. So that can also will be a very, very helpful by reduction further 50 points to 1% rate of interest. So put together, reaching our target numbers will not be tough.
Understood, sir. Thanks a lot and all the best.
Yeah, thank you.
Thank you. We have a follow-up question from Sudarshan Nachimuthu from Prosperity Wealth Management. Please go ahead.
Hello, sir. Can you please comment more on your small business loans? What kind of customers you are looking at? What would be the end use of the same, and how is the sourcing and collection scheme for them?
Yeah. So first of all, we have an entire relationship manager team who does a cold call, who visits the shops and all, and they discuss with the potential customers and borrowers, and then they collect the data point. We are not sourcing a single business from any of the DSA. We have our own team. Mostly these are the small shopkeepers, traders who are mainly into a kirana shop or a mobile shop or like that, who and their presence in the business should be minimum of 3 to 5 years. We also see that there is already line given by 3 to 4 other lenders. We have also earmarked that if one of this lender is there, then there is a more probability of getting sanctioned this loan. So these are the few parameters. A completely digital process. Perforce, we check the entire thing. 6 months complete bank statement, average balance. Then what is his cash flow? What is the balance cash flow remaining for the repayment of the EMI? So these are the very, very robust system we are utilizing, and we are not in absolutely any kind of hurry. And gradually we are performing. After 18 months, with a disbursement of almost 75 crore rupees, our NPA stands only 2%.
And what would be the outstanding AUM for SBA?
60 crore.
Right. And you did mention you would be looking at other players' exposure. So is there any possibility of BT in this segment?
Pardon? Other?
Is there any possibility of business transfer from other players to you?
No. So we are just seeing doing a business correspondence with some of the players, but that we are doing only in the vehicle loans.
Okay. And so you are sticking for your 30 to 35% AUM and 12.5% NIM guidance for the year, right?
Team size you are talking?
No, the guidance of 30 to 35%, you are sticking to it, and NIM would be around 12.5% for the year.
Yeah.
So coming to the OPEX, so it's around 5.5% to the AUM. So what would be the trajectory in which it will be going for the year, and what is the steady state OPEX to AUM number that one can?
Yeah, so OPEX will definitely will become better and better the way we will be able to get more and more business from the last in a couple of years joined states such as UP, MP and Chhattisgarh, because there the OPEX are today it is in the range of 8 to 9% because of the size of the AUM, which keeps on reducing every month on month. So that will be slightly better situation in the OPEX in coming times.
Right. So if you can give us a number of your OPEX on your Maharashtra, Gujarat, and Rajasthan.
Forward numbers, no, I would like to restrict in such a detail. Okay.
Not the forward-looking statement. I'm asking what would be the OPEX for your mature branches and their AUM. So you did mention your Maharashtra, Gujarat, and Rajasthan.
You are talking about today's scenario, right?
Yeah.
Okay. So today's scenario, the branches which is already covered 4 years of operations, their OPEX is around 4%, and the branches which are in the below 3 years, their OPEX is around 7.5%.
Right. Understood. That's it from my end. Thank you very much.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. The question comes from Maitri Shah from Safia Capital. Please go ahead.
Yeah, hello.
Yeah.
Hello. Just one clarification. So a previous participant asked that will we reach 100 crore PAT in FY27. So is that understanding correct?
Yeah. So we have not told about 100 crore. I told about in the range of 85 to 100 crore rupees. So that because we are expecting a 30 to 35% growth year on year, which will support my PAT. Secondly, we are leveraging our OPEX by utilizing all our senior professionals. Thirdly, we are expecting almost 1.5% reduction in the cost of borrowing. So so overall impact will come to that level, and we are pretty sure that we will reach these numbers.
And our small business finance currently has an AUM of 60. How do we plan on increasing the AUM size in the next 2 or 3 years?
Yeah. So it's a very good product, performing well so far in 18 months journey. Almost disbursed 75 crore rupees. AUM stands to 60 crore with an NPA of 2%. But as I told you that company for next 2 to 3 years want to remain unsecured business in below 10%. So we will not go very, very aggressively for this product, but yes, very strongly and on a selective area will keep on starting and leveraging our branch for the same product.
Thank you.
Thank you. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. There are no further questions. Now I hand over the floor to Mr. Manisha for closing comments.
Yeah, thanks. So thank you all for participating in this earning con call. I hope we have been able to answer your questions satisfactorily. If you have any further question or would like to know more about the company, please reach out to our IR managers at Valorum Advisors, and I think they will come back to us, and we would like to give more data and more clarification on your doubts or any questions. We once again thanks Ventura Security for hosting this earning call, and thank you very much.
Thank you, sir. Ladies and gentlemen, this concludes the conference call for today. Thank you for your participation. You may disconnect your lines now. Thank you and have a good day.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming con calls.